Hi everyone, and welcome to this morning's Forex webinar, and thank you for waiting. We were just sorting out the recording as usual. It's great to have you with us today. I'll give you a weather update here in Hampshire. It's a bit cloudy and it's not very warm. Unlike, was it last week we were melting, David? Last Thursday. Yes. Is it? Oh, is it last Thursday? Oh, seems like an age away. Anyway, thank you so much for coming along. Great to have you join us. My goodness, so much going on, so much to go through, and it's only 7:30 in the morning. Right, but before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So very quickly, I'm just going to whiz through just a few slides, really for the benefit of, I know, new people who join us. Those of you who come along regularly, thank you for your patience. But as I said, we have new people coming along. We just like to sort of lay out what they are likely to expect in the session ahead. And first thing they're likely to expect is to hear my voice. I'm Anna, obviously, and sitting next to me is my husband, David. And we've been trading these markets now for, oh my goodness, over 20 odd years. And what we are going to do in this session, we're going to look at the markets through the prism of our methodology, which is what we call volume price analysis, and assisted by our fantastic quantum tools. And I know, as well as new people to the webinars, we have our quantum users, so very welcome, obviously, and also I think we have students on our Forex program, and we'll talk about those a little bit later as we go through the webinar. But to return to volume price analysis, if it's a very new methodology to you, all I can suggest is head over to Amazon. I think the one book will cost you $4.99. It's really all laid out there, and it really explains how this crucial relationship between price action and volume will help to anticipate where the market is going next. It's not a new methodology. It's been around since the days of the iconic traders, Jesse Livermore. Who else is there? Richard Wyckoff. I mean, Charles Dow basically sort of started the whole premise. But what we've done is we've taken it and we've, if you like, updated it slightly. We've included elements of the Richard Wyckoff's 3 laws, and we also use candlesticks as opposed to bars, and we've also, if you like, given it it's a 5-step system. It's a 5-element system. It's it's obviously price action, volume, candles, and candle pattern. Support and resistance. And support and resistance is something we're going to talk about today, which is hugely important, especially to do with the euro dollar, and time in terms of multiple time frames, but also looking at volume as it's transacted over time. And we've got a particular indicator that helps us to identify a region on the chart which is crucial in terms of congestion. It's kind of the value area on the chart. Anyway, all explained in the charts as we go along. But you can start off by, as I said, buying a book on Amazon, and it's $4.99. What we've also done is we've bundled that book in what we call the Forex Trading Library, because it's not just price action we have to be aware of. It's not just technical analysis. We have to understand the fundamentals. We have to understand what's happening in related markets, and more, we also have to understand what the politics are around the interest rate decisions. And oh boy, I'm not sure whether Mr. Powell's going to get a flea in his ear from Donald Trump, but I think he's already had a flea in his ear via his Twitter feed, isn't he? had his ears clipped by him, but we'll see. All right, so all explained, as I said, in the books that are on Amazon. And understanding this, if you like, this relationship between all the capital markets, the 4 capital markets, where Forex very much sits at the heart of it, is something we have taken, expanded on in our Forex trading program. As I said, this is a slide from the program. In fact, what I'll do is I might bring some different slides in from the program. It's a very complete, a very comprehensive program. Just to give you an idea of the extent of the program, there are at least 7,000 slides which need to be gone through to understand the complex nature of this market. It's not complicated; it's just complex. And oh, and David has also reminded me they're all animated. It's he has spent, I think, was it a year it took you to do? It took a year to do. Because we wanted to make them as interactive and as interesting as possible, as I said, and people who join the program, one of the things they ask us is say, well, where are your testimonials? How are your traders doing? And all we say is, I think of all the programs, we've not had anyone ask for a refund. We have a policy with the program that it is you have a period where you can ask for a refund, and to date no one has asked for a refund, which we're very, very proud of. Anyway, we'll talk about the bits and pieces that are in the program just to help explain obviously what is going on in the markets at the moment. And finally, as I said, the volume price analysis, in addition, we've developed these very specific indicators for the Forex market. They're all bundled together in the currency dashboard, but you don't have to buy them as a dashboard. You can buy them on an individual basis, and as well as the full package. It's not just the dashboard that is available from Quantum Trading. As I said, it's a full individual bundles and, as I said, the full package. But the four that are specific to the Forex market, to help us make sense of this market, is form this set that we call the currency dashboard. And we're going to be, I particularly use, certainly for short-term trading, this first three, which is here, the currency strength indicator, which shows us what the individual currencies are doing, as we can see here from these lines, and also what these lines, not only what they're telling us, but what is happening in the market, but is also what is not happening in the market. And that's been really important this morning because early doors traders have kind of been recovering a little bit from all the fireworks from the FOMC yesterday. Then there's an indicator which sort of ranks the pairs, the performance of the pairs, the data taken from the CSI, what's moving up, what's moving down, what's overextended, overbought, oversold, potentially highlighting a trading opportunity. Then we have the array, which actually measures the momentum of any move that's going on in any particular time frame. And there is a currency heat map, which actually looks across the performance of the pairs across multiple time frames. Now, having said that, I tend to focus on all three. The currency heat map is also one to keep an eye on. Particularly as you can see this ripple effect of the buying and selling as it moves through the different time frames. And if you are on a trading short term, it's good to see that because it kind of picks up the reversals as they are happening. And as I said earlier, the indicators are from quantumtrading.com. It's a company David and I started some years ago. You can buy one, you can buy a bundle, or you can buy a full package there. The advantages of starting with one, it gives you an opportunity to test the company out, to test us out. You may not know us. What kind of customer service do we offer? Do we keep to our 7-day money-back guarantee? And I will answer my own questions, and I will say yes to everything. And if you can go from one, you can go to a bundle, or you can go to a full package. But whatever you buy in terms of one or a bundle, and you ever want to upgrade, we will always credit you with whatever you have bought. All upgrades are free, both to platform and to the indicators. And the platforms we have at the moment: MT45, NinjaTrader, TradingView, and TradeStation. Have you got the TradeStation currency matrix up? A screenshot of it, David? Because we've made some really nice refinements to the currency matrix. Oh, David hasn't got it, but he will show it. Maybe we'll show it in the next webinar. We're always refining the indicators. We're trying to make them as good as possible, and we always come up with ideas, and this particular refinement for the matrix I think is going to be really, really cool. You can find details of the indicators at quantumtrading.com. That's the videos and obviously all the pricing as well. The program is at quantumtradingeducation.com, and as I said, it's the complete Forex trading program. It does include the full package of trading indicators. You just have to select which platform you would like the indicators for, and as I said earlier, we credit you with anything that you may have purchased from us in the past, and it really is, we believe, all you need to know to trade Forex with confidence. And the website for that is quantumtradingeducation.com. I'm just going to stop there, take a cup of slurp of coffee. I'll just pass over to David and I'll get my charts ready.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's a little bit nicer than it is here. It's a bit cloudy, and but at least it's not raining. It has been the last few days, but not today. So good to have you with us today. Certainly been interesting last 12 hours, 24 hours with the FOMC. If you have any questions, please just drop them in the chat box. Happy to answer them there if they're short ones. Longer questions we will answer on air. I think just to answer your question on Abdullah on the tick chart versus time frame on MetaTrader, we haven't got live tick charts, so I'm more than happy to answer that one on the NinjaTrader, where we do have live tick and tick versus time and advantages and disadvantages and everything else to do with how to use that particular approach. So happy to answer it there, but we don't have the tick charts on MetaTrader. But I'll certainly answer it for you later today on NinjaTrader 8. I can do it here. I can take a quick look at it, perhaps when we flip over, but I'll probably cover it in more detail later on this afternoon. Yeah, no problem. I think that's it. I'll pass back to Anna. It's certainly been interesting, certainly since we've been up and about 6 o'clock. What's interesting has been the CSI. We look at the CSI. Obviously, predominantly, we're looking for entries, we're looking for opportunities, reversals, extremes, etc., etc. But certainly since over the last couple of hours, what's interesting about it is that the currencies per se have really been moving sideways after, as Anna said, after the fireworks of last night. Been a lot of sideways action. They are now starting to separate, certainly on the faster time frames, 5 and 10. We've seen some further dollar buying. We've seen euro weakness. Interestingly, a bit of pound buying, but the pound's been going up against the dollar, so there's no great trend there, certainly on the fast time frames at the moment. But it's starting to unravel, and we're starting to see that the development of strength and weakness coming along now. But it's the point I make that with CSI, not only does it tell you where to get in or what to look for, strength of the angle of the line tells you about the strength of the currency rising or falling. It tells you whether a currency pair is trending strongly or not, if the two lines are moving together or are they diverging strongly. It tells you about the extremes, but it also tells you what pairs not to look at. And when markets are in a listless sideways region, you can see there on the hour, for example, we've got a bunch of currencies in the middle there, just flip-flopping around. They're listless, they're moving sideways. There's no great strength or weakness there. So you wouldn't particularly be looking at those for opportunities. You'd obviously have to go down to faster time frames, see if something's developing there, and also be looking at extremes. But it is starting to pick up now, so I'm going to pass back to Anna and we will get going.
This is the perfect way to use this indicator. In fact, it's all charts, and that is in a multiple time frame format. Now, the format I have and the time frames I have here, I have an hour, I have 30 and 15, because I'm looking for opportunities on the faster time frames. But you could do this, any combination, and depending on the time that you anticipate being in the market. The price action, of course, will dictate to you. Sometimes, trade can go your way and it's fine. At other times, the anticipation is that you're hoping to hold a trade for a certain period of time, especially if you are a medium-term trader in terms of a swing trader. Sometimes the market moves against you and you come out. But what the time frames do is really, it kind of focuses your attention to to those charts that you are going going to be considering and looking for a trading opportunity. If you were with us last week, I know I spent a lot of time on it and looking at how the daily chart can give you a lot of assistance in terms of bias, but I also said there's a caveat with the daily chart, and that is that because this market is really three separate sessions, individual sessions with their own characteristic, their own local traders, the daily chart can sometimes be a little sort of misleading, as it were. And with MT5, you've actually got an 8-hour chart, so it actually breaks up the three sessions, and you can see that. You can see in 8 hours, Europe and London, they're doing one thing on a pair. New York comes along, and you have a complete reversal of sentiment. Now you won't see that necessarily in the one daily candle. It doesn't mean you never use the daily, but for overall context, as it were, it's something you have to be aware of. But to get back to the lines here, it's a perfect illustration. I have, as I said, I have an hour, 30, and I have the 15, but I could easily move this down to the 5. And really this morning from 6 o'clock, what we could see after yesterday is all the lines were, as you can see here on the hour, apart from the pound, the dollar and the euro at these extremes after the moves of yesterday, they were in the center here. And that tells us that these currencies, that they've had a move, as you can see here. You've had the yen, you had the sharp fall in the yen. We've had a move in the hourly chart on the New Zealand. We've had nice moves, prior to when we came to the terminal this morning. But at the moment, there is no clear direction, certainly on the hourly chart. And then the great way to use this this indicator is with the matrix, because then what it does, you've got the actual pairs there already ranked. And what I do, and it just saves so much time, you bring the hourly chart, you bring the one chart up. With MT5, you've got a function called docking, and if I just showed you here, what happens is it allows you to move the charts away onto another screen, which I don't believe you can do with, in fact, I know you can't do it with MT4, and it's one of the reasons that I like MT5. So you have the lines here, you have the matrix up, and what very, very simply, my 1 hour chart is like my benchmark chart. It gives me, enough information on the price action and volume to, to give me a view of what is likely to be happening on the faster time frame. So this is the euro dollar. It just happens to be the euro dollar because the euro dollar is one that I want to just mention again, in particular in terms to do with support and resistance, and just cover very briefly what happened yesterday. But then what I do is I have the hourly here, and I just go over to Market Watch, and then simply bring over the pairs that, as I either see on the matrix or looking at the lines. And let's have a look at some of the ones in the middle. I don't know. Let's have a look at pound yen. That's always a good one for pound yen. Let's just find my way down here quickly. I've had this. Oh, here we are. Let's have a look. Let's have a look what this is. Right, we bring that over here. And what's interesting about the pound yen is exactly mirrors what we are seeing on the CSI. In other words, we can see this. We've had a pull away from the volume point of control. This is the, if you like, the area of the chart where we've had the greatest amount of volume over time. The volume point of control is volume, price, and time. This is this yellow line on the chart. It's taken principles from market profile. It's taking the idea, if you like, at this price level here, there is congestion because the market, can't decide whether to go one way or another. So it had this pull away, as we see here. But generally, if you look at the candles that we see here, in fact, we've got this down candle here, and we have the subsequent 1, 2, 3, 4 hours of sideways, but not only sideways, but actually trading within the spread of this candle. So we have 4 kind of inside candles within this range, if you like. Now, what that tells us is that down on the faster time frames, yes, there is possibly going to be, there may be some divergence occurring, but we have some very clear levels from to the upside to the downside, and it's just telling us, it's reflecting what we see. So I've got it on docked on the 1 hour CSI, where basically these two lines, the pound and the yen, kind of moving sideways. And if we go down to the faster time frames as we have here on the 15-minute, we can see here the pound is rising, but so is the yen. So we go to the 15-minute chart here. Let's have a look. I've got to take it off docked, otherwise it won't change. There we are, 15-minute time frames. And yes, and what is this telling us? We're still moving in congestion, and quite a heavy congestion. That congestion is a confirmation of what we see on the hourly chart. We know what the range is. This is the top, this is the bottom. The volume point of control. Volume is way below average. There's no clear divergence. The market really can't decide whether to push this higher or whether to push this lower. So what does this tell us? Well, unless we have a particular tactic where we are actively looking for a market or instrument that is moving sideways, what we have to wait for here, we have to be patient here, because eventually it will diverge, it will move away. Nothing stays in this congestion phase of price action forever. Now, the one thing that will help move the British pound, well, two things today. First of all, we've got the London Open coming. It's 7:52. 8 o'clock, we've got London Open. And today, we actually have, getting back to our 3D approach to Forex trading, what do we have? Well, later on today, we certainly have the BOE coming up at 12 o'clock today. And we've got manufacturing PMI at 9:30. Because it's the beginning of the month, we always have the PMI data coming through. And this is the good thing about Forex. We know when these important releases are going to be, rolling through, and also what time. So as a trader, we can be aware. Yesterday was classic. With the euro dollar. I've had a euro dollar short on for some considerable time now. I've been short the euro dollar. And the big decision I had yesterday was with the FOMC coming up. Do I close out, or do I take some of the profit off the table and leave something on? And in fact, I actually decided to stay in the trade, or a part of the trade to stay in. And there were various reasons for that. And as I said, I'm going to explain about support and resistance, but key support levels at a time when they coincide with a big news release, as we saw yesterday with the FOMC. So pound yen, it's great at the moment. It's in sideways. It's in a sense, never be afraid of congestion. Never be afraid of, look at a chart and say, oh, it's not going anywhere. I've got this congestion period. Very, very frustrating. It's not going to stay there forever. We just have to be a little bit patient. But what it tells, sorry, let's move that to docked again, apologies, move that over. But that is being highlighted for you on the CSI. So back to the euro dollar very quickly, and then we'll move over to David. Let me just bring my euro dollar. Anything you want to say to that, darling? Anything else you want to add to that?
Only on the congestion chart.
Do you want to bring it back, or are you happy to move on to yours? Yeah?
No, you can move back.
Fine. Can I go on to the next chart?
Yeah.
Yeah. Right, very quickly, euro dollar. Here we are. Someone asked about tick charts for MT4, MT5, and I don't use tick charts. I use Renko charts. Is another non-time-based chart for entries, exits, and also for staying in a trade. Let me just expand this, but very, very quickly. Yes, euro dollar. Why did it collapse the way it did? Why did the dollar shoot up? And Jay Powell did what he said. Interest rates were cut, and the market it was all over the place. Well, first of all, it was only a 25 basis point cut, not a 50. Did he not also cut down on the bond buy, the quantitative tightening? That was kind of abandoned. It was all kind of set up for well, why didn't it happen as it did? Well, first of all, 25 is not 50, so that wasn't considered perhaps sufficient. And then there was all sorts of confusion, because the market commentators were saying this was an insurance cut, this was a one and done, so basically it's going to be a one-off, and that was it. And the impression the market got was, yes, that was going to be the case. There were no more cuts. Everything sold off. He then, in the press conference, said, "No, I didn't mean it was one and done. We will continue to monitor situations." And in fact, the equities kind of came back a little bit on that. but overall, it was not a good day for Jay Powell, certainly from Donald's perspective. But for the market as well, and the euro dollar, we go to the daily chart here. This is what happened, because when we have an interest rate cut, the expectation of the currency is going to weaken. But what I said earlier, the thing about euro dollar, which was the most interesting, is that it has been trading around. Apologies, we have two dogs and they've suddenly kicked off for no particular reason. Yes, this particular level, and you can I've written about this on my Forex page, and this level here, which was at 11.15, as we see here, support platform. Just go here, we can see here, it wasn't a strong platform, but this is on the daily chart, the number of times when it's actually bounced off here. So this candle here, this doji candle, this was the ECB last week. A lot of volatility, a lot of up and down price action, lots of trading opportunities. Then we had a retreat to within the spread of that candle in anticipation for the Fed. When you have a chart which is at these key level, a key support and resistance level, a psychological level if you can, then it's combined with an event such as we had yesterday for the FOMC, and it has bounced off in the past. My view on this is that a lot of traders would have looked at this chart and said, right, great support level, Powell's going to cut interest rates, the dollar's going to weaken, the euro is possibly going to rise from here. And if we go to the monthly chart, it's even more stark, because on the monthly chart, what we also had, I'll just expand that more interestingly, it was also, we've had the VPOC in play as well, and it's actually now looking like a pull away from the volume point of control from a technical perspective. And then you have all the other fundamental factors as well. And where is the next major stop? And I'm talking major stopping point here, and that is way down here at 10.49. Now, against the price action that you see on the chart here, the break of this support platform that we have here on the daily chart, we also have what's called the race to the bottom. Every central bank wants a weak dollar, including Donald Trump, and he's not getting his weak dollar at the moment for all sorts of reasons. The UK, the British pound is weak more by accident than design, and that's from what's been happening with Brexit. So the central bank can pat itself on the back because it doesn't have to do anything. It's just the market that's done it for them. The ECB, partly because of what was said last week, and as I said, given an extra shove lower from the FOMC yesterday. And to get back to the this is the Renko. This is the move lower. What the Renko also does, it highlights this sideways price action and then gives us the potential for a re-entry. Again, we use support and resistance, we use the trend dots and the trend monitor. So that's what I'm going to say on the euro dollar for the time being. And to get back to what's happening on the, let's have a look on the CSI here. Have a look. We've got the possibly the dollar turning around, but we've got an awful lot of bunched in the center here. What's moving? We've got the dollar moving on. I've got the 15-minute here. The nice thing about the CSI as well is when we have a cross of the currency lines as well, the currency that we see here, that's also potentially telling us that, while we may not have had the major divergence from an overextension, a cross is also saying, look, hey, go and have a look at that currency pair, something might be happening. And backing that, we have here the currency matrix here. What's that telling us? We can again look at the extremes. We've got the dollar CAD. Let's have a look at the Canadian, because that's kind of moving at the moment in the center of the CSI. Let's have a look. That's moving sharply lower. Let's have a look against what? Well, against the dollar, it looks like it, and the what's moving? The pound CAD. It's really a case of going to what the CAD yen looks quite interesting. As I said, we've got this cross on the 15 minutes, so that may be a pair worth exploring. I'm going to pass over to David because he's got NinjaTrader and see what he's been looking at. As I said, if you've got any questions on what we've said, pop them in the chat box and we will answer them.
Thanks, Alex. Sorry, I was just answering some questions on the chat. There we go. Just pull my screen up. Just to reiterate those answers on the currency array. In fact, I'll go to the currency array right now because I had it up a moment ago. I've got the euro dollar there on multiple time frames. Let me just go to the array. There we go. There we go. There we are. That's been the picture on the euro, certainly over the last sort of half an hour or so. Pretty much euro selling, but as we come into London, this is 8 o'clock, we're just coming into it now. And what we're always looking for, if you're an intraday scalping trader, then it's an ideal opportunity because whenever London opens, the prospect of a reversal is very strong indeed. And whatever's been going on prior to the open, then you may well see a reversal short term, certainly for the sort of first 15-20 minutes, and thereafter it often picks up the longer term trend once more. Sorry, one of the dogs wrapping around my cable. So that's the picture on euro. In terms of, let's just go up to a slightly slower time frame. Just to highlight, this was the question about the overbought and oversold. Whether in brackets, it means they're approaching that particular state. So obviously we're looking at this from a currency pair as opposed to an individual currency. And when those brackets disappear and they go to a bright color, then they are potentially at that state. In addition to that, the array line will also turn to solid as well to signal that. You can see down here, perhaps, or maybe not, this is quite small. You can see down here, this is the euro dollar at the bottom, and up at the top, we've got the dollar Swiss, dollar yen, dollar CAD. So still some decent dollar buying around. Just head back onto the time charts again. Let's have a go. There we go. Okie dokie, just move that out of the way. And what was interesting, as Anna was talking, I was following euro dollar just to see what was what. This is on 10 minutes. We had the volatility trigger. I'll just pull that up, make that a little bit larger. Again, it just highlights this whole issue of when volatility is in the market, you have to be careful. You've got to understand when volatility is coming in, because it is the time when the market makers or the insiders or the big operators are going to be moving the market quickly. The reason they move it fast is very simple. It drags you in as a trader, and you then are drawn in and trapped into a weak position and then regretting that decision. It is very basic. It's a sort of primeval level of trading, because your instinct when you see something moving quickly is to move quickly also. The fear of missing out is so strong in this game. It really, truly is. So when you see it moving rapidly, your instinct, your natural instinct as a trader is to jump in and believe that you are going to make some quick profits. And invariably, this is what happens. It is the pain of sitting here. This was a snap up. The volatility was triggered. The market moves sideways and has actually rolled over and is now continuing in the direction of the original trend, in other words, bearish. So all these traders who jumped in here thinking they were going to make some quick profits are now regretting that decision. Probably most have either closed out or certainly been stopped out at any rate if they're intraday traders. And exactly the same thing here. Down to the downside, snaps fast, you jump into a short position, and then you regret it as the market retraces against you. On this occasion, it looks as though it's going to continue. Why? Because the trend monitor is remaining bright red. The trend line is diving below this midpoint here. The trend line and trend monitor are two indicators in one. Just gives you a sense of where we are in terms of the fulcrum of zero, if you will. I guess it's you can think of it in a similar way as to a volume point of control, where you have a point at which the market is in price agreement, and now you are starting to see a bias in one direction or the other take the market in a different direction. Excuse me one moment, just going to clear my throat. Apologies, didn't want to do that on air. Let's just drop that out of the way. What else can we see on the chart? Let's have a quick look. VPOC in evidence, clearly this is the 1 minute, this is the 3 minute, this is the 5 minute. So we're trading around the volume point of control for the time being. You can see it clearly here, the yellow line. Not in evidence on Thursday, just refresh. That's on 10, beg your pardon, just refresh that. There we go. So it's not in evidence there, but certainly from an intraday perspective it is. And as Anna said, going down to the daily, just for context, what did we see last night? Very heavy selling, nice widespread down candle, a ton and a half of volume under there. So we're expecting a further downside momentum to follow, which is what's happening overnight and into the morning for the time being at any rate. Let's just go back to the CSIs again. This is on 5 minute. We saw that initial buying of the pound, and at the time, this is when Anna was talking, this was a few minutes ago, certainly the trade at that point was very much the euro. We had heavy selling of the euro and some decent buying of the dollar. And that's why we saw a decent trend, certainly on the 5 minute time frame at any rate. And looking at cable, the red line and the yellow line, they were both rising together. So there was no trend on cable. There was no discernible trend to trade. And it's all about choosing the pairs which are going to be moving and ignoring those which are not. So if you're seeing strong dollar buying, then it doesn't automatically relate to all currency pairs. Some will be moving strongly and others will not. And that was just a classic example where the pound was not moving, it was in congestion against the dollar, whereas there was a nice trade to be taken on the euro. Now we have some divergence coming in. We're seeing some decent selling on the pound. Just head up to, this is the 10-minute time frame. You're starting to see that reflected on the 10-minute time horizon as well. So what are you looking to match that against? If you're looking to continue the selling of the British pound, where would you be looking? Well, you certainly wouldn't be looking against the euro because the euro is moving in the same direction as the pound. Where you would probably be looking is against the yen. So certainly the pound yen would be starting to move now. Just have a quick look at that. Let's see if that is the case. Let's head over to the time-based charts. There we go. That's in congestion. Let's just put pound yen in here. See where that's moving. Just wait for that to load. Okay, we're starting to see that selling coming in on the 1 minute, but note down on the 10 minute. Danger signs again. Let's pull that over a little bit too big. There we are. There we are, about there. You can see here, what have we got? We've got a volatility trigger. Now that has already been triggered. And what that's telling you is it's issuing you a warning to be careful. Why? Because we've got a fast moving market. The volatility has triggered. It has basically moved the price action outside the average true range. In other words, this is abnormal price behavior for this time period of 10 minutes. And therefore the expectation is, and it's reinforced further by the fact that we are trading once again around the volume point of control in this particular time horizon. A lot of traders will have jumped in there looking at more pounds selling. They're now trapped into weak position, what we're expecting, and you know it's inevitable anyway. Just close this down a little bit. There we go. There's an inevitability about it anyway, because there is a decent amount of buying coming in under that candle. The market's closed halfway up. The expectation now is for further congestion to follow. We're at the volume point of control anyway. So this market is going to congest for the time being around that particular signal. And that's what, it just gives you that sense, you know, as an intraday trader, if you're scalping on the 1, 2, 3, 5, whatever it is, then it just gives you that perspective. It's so powerful in terms of different time frames, what to expect, and it just gives you that heads up, and it gives you a warning as to what is about to follow. Because as far as these guys are concerned across the top here, the 1, 3, and 5, you haven't seen that volatility develop, but you certainly have down on the 10. So the 10 is giving you a clear signal, a clear understanding of what to expect if you're up on the 1 minute time frame, or the 3 or the 5, or indeed any other faster time frame. Let's just go over and see what's happening on, sorry, let me just change this over to euro yen, not euro dollar. I'm going to look at euro yen. Well, There's anything developing there, and you can see on the 10-minute here. Just let me just get rid of this bit over here. If you want to give a better definition to the volume profiles, that is the way to do it. As you can see, the whole thing is condensed by this ton of volume that came in last night around the FOMC. Just ease it out and it gives you a much better perspective. You can see under this candle here, we've got some decent volume coming in here. This is 8 o'clock London time, 10-minute chart. So this is the second candle. We're now moving into the third phase. Got some decent buying under here. Nice wick to the lower body. Good volume to support that. So there is definitely buying around in terms of the euro against the yen at any rate. And therefore, as a trader, as a volume-based trader, reading the market as it unfolds bar by bar, candle by candle, you start to understand and interpret precisely what is going to happen next, and therefore it doesn't frighten you. If you're in a short position on this and you see this sort of price behavior, it's no great worry, because you've just got to make a decision. You've got to decide whether this is sufficient for a full-blown reversal to take place, or is this merely a pause and pullback that you see in every single time frame on every single chart. But it tells you what is about to happen next. So you're not trading through fear, you're trading through common sense and logic all the time. Just go back onto the CSIs again. That's on 10, step down onto 5. Euro's flatlining. We've got some buying coming in on Aussie, some strong buying coming in on the Canadian. So in terms of a cross, in terms of where a trend will be developing, you've got the Canadian rising very strongly, you've got the pound falling very strongly. You wouldn't have much of a trend for the Canadian dollar at any rates against the yen, because they're both rising strongly on that particular time frame. Let's just go up onto a slightly slower one, up onto 15. Decent yen buying here. Euro selling is continuing. Dollar is flatlining. In fact, let's just go and have a look at the indices charts themselves. Where are we? Here we go. There we go. I've got this on 10-minute. Top left is the yen. Top right is the dollar. Bottom left is the euro. And bottom right is the British pound, which is fairly flat at the moment. We've still got some dollar buying coming in on that particular time frame. This was last night, into congestion, another kick up, into congestion. Looks like we're trying to rally further on that one. The yen is bottoming out. We're starting to see some buying of the yen coming in, which is no great surprise given the strength of selling on the US markets last night, with a huge down bar following the FOMC. Sorry, Lauren. So, you want the, can I just move over very quickly? Just going to move back to Anna for a moment. Very quickly, and then come back to you on the pound yen. Yep. Okay.
Pardon, I hadn't turned myself on. I know David was having a look at the pound yen, and it was one that I said earlier on, it was in this congestion, both on the hour and even down to the faster time frames. And I said, oh, we were waiting for London. London has obviously opened at the moment, but just wanted to make another little point about the CSI and these crosses, because this is how you can use the multiple time frames. As we see here, let's have a look at the hour and the 30-minute. Well, we haven't quite got a cross yet on the pound and the yen. They're still a little bit far apart. But on the 30-minute, we've had this little cross. And as I said, that is potentially telling us that, you know, something has started to move on the faster time frames. And what is also we see here is the pound yen is actually at the bottom of the matrix, which also tells us that, you know, of the 28 pairs, it's had a, you know, it's beginning to have a significant move. On the 15-minute, it's also at the bottom. And looking at the lines as well, well, we've had a bit of a drop, a significant drop in the pound, and the yen it is rising, but possibly, you know, it certainly hasn't risen in to the same degree as we've had the fall in the British pound, but the pair is still showing here at the bottom. And if we compare that with what's happening on the chart, albeit we have had, as I said, this is the 3-minute chart, we have had, we're just, still feeling the effects of the London Open. The break away was from the volume point of control. This is on the 3-minute. I'll just take it off dot so I can change the time frames, go back to 15. This was the 15-minute that we were looking at. Here it is moving sideways. Unfortunately, it was also accompanied in terms of price action with the volatility candle, which whilst that was a fantastic move and a reasonable number of pips, because it was accompanied with volatility and the triggering of the volatility indicator, the expectation now is that the price will now move back into the spread of the candle, which it has duly done. So if we go down to the 3-minute chart, this is what we're seeing. This is the initial volatility, retrace. It's had an attempt to break lower. Now it's gone back into, there's been buying coming under this candle. Why? Because we have a lot of volume underneath it, and you can see here all the volume is above average, reflecting the the additional traders that have come into the London session. So it's a case of now waiting whether this is going to be a true breakout, or is it a fake out that sometimes happens with the start of the London session. What I have here, I've actually got a template. Let's have a look here. My profile for the pound yen, and my Renko has disappeared. But I'll pass back to David, because I think you had the pound yen on multiple time frames on Ninja, didn't you, David?
Yeah.
Yep, I'll just move back to David and I'll go and what's happened with my MT5, those of you who can see, I've used a company called XM, and one of the reasons I use them is because they offer a dollar index, an actual the version of the futures index itself. But they've had a change of they're now called trading.com. They're not XM, although I think they still use XM logo, and they moved my everything over to a new platform, and not all my charts are behaving as they should do. So let me just pass over to David so we have a look at what's happening in the pound yen.
Apologies, I lost a chart somewhere. I found it again now. There we go. Yeah, all losing charts today. And I said you don't have to do the pound yen, but there we go. And it's just another example of the power of using multiple time frames again. And in this case, just to reiterate, this is the 135 across the top. Then I've got the 10, the 15, and over here on the daily. And down on both the 10-minute and the 15-minute, we have got volatility. Let's move that out the way there. Pick up the right one. There we go. So we have a volatility trigger. Just scroll that back a little bit, make it a little bit less compressed. We have a volatility trigger. In addition to that, we've also got a very strong platform of support below at 132.20. This is on the accumulation distribution indicator for NinjaTrader. And the way it works is, I was going to say very simple, it's actually quite complex, but the way it presents the data is very simple in that the strength of these regions is denoted by the width of the line. So the wider the line, then the stronger that particular area of either support or resistance is likely to be. So as you can see up here, these have just been tested once, and therefore relatively lightweight. You can see it was tested here in the near past, in this area here. So that's a relatively light area. These regions here have been tested multiple times, and the wider the band, then the stronger those regions. Moreover, when you get a cluster of one or two, like we have here, we have two of these regions. Then when they cluster together like this, this is an immensely strong area because you've got double the strength, in other words. It's exactly the same on MT4 and MT5. The way the price-based support and resistance works there is very much on a dashed or solid line. The solid line is much stronger, the dashed line is less strong. But nevertheless, when you get them clustering together, those are very strong areas. And as I said right at the top of the webinar, support and resistance is a key region. I know a lot of traders get frustrated with congestion phases. Personally, I don't. I'm always hunting them out, because when the market breaks away from these, particularly where you've got very strong regions, as we have here, we've got a very nice ceiling of resistance in above at 45, 44, 45, and we have this very nice platform down below at 20, which is holding the market right now. The trend monitor is starting to move into transitional. It's starting to come out the other side. So we've gone from very bearish. We came into this little bullish run higher. We've now come out the other side again. We've gone back into a darker blue, and we look as though we're coming straight out into dark red again for the pound yen at any rate. And as I say, the volatility is just giving us a straight heads up that we are likely to see the market moving into congestion, which is what we're seeing up on the 1 minute, up on the 3 minute, up on the 5 minute. Everything's in pause, and we are just waiting for the next phase of price action. And down onto the 10 minute. Another reason that you're seeing some pausing at the moment, we had the volatility trigger here. The following candle was a deep wicked candle to the lower side. Good volume under there. We're in the London session, so it's to be expected. And we're just waiting and being patient. We're on the volume point of control. And again, we've got some very strong levels. We've got a less strong level here, which is literally just being tested as I'm talking at, what is it, 23, maybe something like that. And then down here at 18 odd, we have yet another level. But if we break to the downside through this level, two things then happen. First of all, you've got a very strong ceiling of resistance overhead to give you some protection. And secondly, we're moving then down into a light volume area on the volume point of control, because that works in exactly the same way in terms of support and resistance, whereby the accumulation distribution indicator is based on price. The volume point of control prints the volume histogram. And where you have dense regions of volume, and all this volume in here is I'll just pull it right, it's an absolute ton and a half of volume. You can see how much volume there is there. I've pulled it right the way across. This is the volume point of control. This is the reason it's there. It's because the pair is trading in this very tight range, relatively tight range, and all this volume is constantly building. What that's telling you is that the market is in price agreement for the time being. In other words, there's no strong bias on this particular time frame, one way or the other. Yes, there are intraday moves, there are minor moves, but in terms of a big move away from this, that's what's happening. It's congestion, and therefore above and below you get the regions of low volume and high volume nodes. And the key is that once the market breaks away from this region, which it will, as it approaches these regions, particularly low volume, you expect the market to move through there pretty swiftly. So as a trader, what you're looking for, you're hunting out these areas to overlay them with your price-based support and resistance to give you a heads up as to what is like to cause a problem should this market break in the direction I'm going to trade it. And if it does, what are there barriers in the way to progress higher or lower for that particular trading opportunity? Let me just go over to the tick charts, because I promised to answer that question too. Can't remember what I've got set up there. What have we got? We've got euro here. We've got euro dollar. This is on 1, 3, and 5 minute. This is on a tick speedometer. And these are the tick charts. These are currently set to, I need to reset these. This needs to be 2333 tick. There we go. 233 tick. We're now trading on a tick chart. And the one thing the tick chart gives you, which is exactly the same as a Renko chart, it gives you a sense of momentum, speed of market. If the market's moving fast, then the tick charts will build very quickly. The tick count will be higher. And you see momentum in the chart. You do not see that on a time-based chart. And it's exactly the same as a Renko. You'll see it on Renko, but you won't see it on a time-based chart, but you'll see it on tick. So tick and Renko charts are non-time-based. And the metric that's used is purely the tick chart number that you have. So we've got 233 ticks here. So every time 233 ticks have gone through the market, it forms the candle on the chart. So that is independent of time. Time has no relevance to this chart. That can happen in nanoseconds or microseconds. It makes no difference whatsoever. So when the market is fast moving, you can see up here we're in red at the moment on the tick speed. It's pretty sluggish. There's no great participation. We're not moving fast. These numbers are relatively low, 233, 610, and 610 for the 5 minute as well. So it's pretty sluggish. We've got the red flag warning here. We're not moving fast. We're in congestion again on this particular pair for this particular session for trading on tick at any rate. And we just have to wait and be patient. What we're waiting for is these to all move to orange, or preferably green, where you can see it here. This is as London gets underway. We see a big pick-up in activity, lots of tick activity. It turns to green, and that's when we will see momentum deliver it in the tick charts. Let's go back onto our time-based charts again.
Well, somebody asked, have you looked at Euro Swiss?
Yeah, I think it was, what was it, Euro Swiss? Was it Euro Swiss? Not sure. Someone asked about daily chart of, where was it? Was it Euro Swiss? Let me just pull that one up. The next question, of course, is, well, at what point do you jump back in? If you're looking to trade this opportunity, where would you be looking to get in? Well, there's two levels. The first is through here. If we get through there, you might be comfortable getting in around 15. Alternatively, you might decide that because you've got this candle over here and another level here, that moving from 15 to 32, in other words, 15 pips is not enough for you. So you may decide to wait for a more developed move below this region. That's a personal choice. In terms of placing your stop loss, assuming it meets your money management, then you can put it above this one here, or indeed, preferably, if you've got it above this level here, and then you've got tons of protection above should the market reverse against you. But that depends if you're scalping. If you're scalping, it's got to be closer. If you're trading on this 15-minute and maybe a 30 or an hour up to something like that, then you can afford to have a much wider stop, and you'd certainly be putting it above this level, in my opinion, at any rate. More buying coming in on that last candle there. You can see it. Decent volume, another wick to the lower body, trading around inside this candle for the time being. Good support regions below. That's why we're bouncing around. VPOC above. It's all pretty sedentary at the moment. And just classic congestion building on the 1 minute over here with the VPOC. And working in exactly the same way. It doesn't matter whether you're looking at a 1 minute chart or a 1 month chart. The principles are the same. We're trading around the volume point of control. We've got pivots all over the place. Pivots above, pivots below. That's fine. We're just not going anywhere. We've got a low volume node up here. So if we broke to the upside, it would move through there pretty quickly before it hits all this resistance up here, both volume and price based. To the downside, if we move through this region down to the downside, we've got a low volume node here. Trend monitor's bright red, just helping us to keep us in if we're going to be trading this as a scalping trader. Want to wait for it to get down to this level. Through there should be pretty swift because there's nothing much in the way to hinder progress there. Let's have a look at 3, see what that's telling us. Similar sort of picture, low volume node below. No price support to come into play there, certainly on that particular time frame at any rate. Up onto 5, let's have a quick look at 5. We've got some minor levels here. This has been tested twice, this has been tested once. So this is a little bit stronger than this fella below. Trend monitor's bright red, trend line's diving. So, if you're going to trade this at the moment, then, looking to short, there's a bit of a wick to the upper body here. This could end up as a doji. Yeah, it has. So we've got indecision. Remember, a doji is not about, it's not about direction, it's about indecision. So if you get a trend and then you get a doji at the end of it, do not think that's a reversal. It isn't. It's just simply indicating that you've got congestion building. Let me just flick over to cable, just see what's going on there. Similar picture. Got some decent buying on cable here. Sorry, let's scroll that out, get rid of that again. There we go. We've got some decent buying under here. We had the volatility triggered. This is on 10-minute again. So we're trading in and around the spread of that candle. Once we clear that candle, then you'll clear away from the volatility and hopefully calmer waters in terms of trend direction, trend strength, trend weakness. Gosh, is it? Okay. What was the daily chart question? The Euro something? Can't remember now. Was it Euro Swiss? Yeah, it's daily.
It says, can you please analyze Euro Swiss?
Euro Swiss, okay. Let's have a quick look at the Euro Swiss. Pop that up full size. Euro Swiss. Well, if I was looking at that, based on that from yesterday, and certainly over the preceding days, what have we got? We've got a rally here, falling volume, so that's looking pretty weak, which is what we got. Then we had very strong selling under yesterday, so we've got a decent candle with a lot of selling. We've got rising selling pressure under that particular candle, or last 2 days at any rate. We've got a low volume node below. We're moving away from the volume point of control. Trend monitor's bright red. A little bit of a transition color coming in, maybe purely based off these guys here. If I was looking to trade that, and this is not a recommendation because we don't give recommendations, just telling you what I see on the chart. Below, as I say, low volume node. Looks as though it's going to break to the downside. And if it breaks to the downside, then we'll see further downside momentum develop for that particular guy. Let's have a quick look at the weekly. There we go. Pretty much reflected on that. We saw some minor buying coming in last week, decent volume, buying under that candle, but a pickup. And we've got a relatively minor level of resistance overhead here. But a low volume node below, and the trend monitor is bright red, as you would expect, as we break away from that particular phase of price action. So there we go. Heavy selling there. Sorry. SMB. Yeah, but always watch the SMB as far as the Swiss franc is concerned. And clearly, as I'm sure you know, it's a safe haven currency also. So that is something always to bear in mind when you're trading that particular pair. Okay, let's have a quick look at the euro dollar and then we'll wrap up. Okay, and that's in sideways as well. And again, it just it just reiterates the point I keep making all the time. This was the candle we were looking at earlier on. Everyone jumping in here, and now they're being squeezed, and the pain is extreme, and they're starting to wonder if that was a good decision after all, and maybe it wasn't. And they've either been stopped out or closed out from the market. So there we go. Can I pass back to you, darling? No, that's it. Because I watched your thing. Oh, fine. Okay, that's it for now. We are back. We are back at 3:15 today to do the forex indices, commodities, and generally the markets, and we will see how this unfolds through the morning. So hope you have a good trading session. We will see you later. If not, enjoy the rest of the trading week. Appreciate you coming along. Hope you've enjoyed it, and bye for now.